Um, well, ladies and gentlemen, very good morning to all of you. Welcome to the inaugural Singapore FinTech Festival. It's a great delight to see so many of you here. We have more than 11,000 participants from more than 50 countries attending one or more of the many events lined up over these past 5 days. We do apologize for the rain and the traffic jams. Could not be helped. I heard the Uber price for a ride from the city to here is $50 now. We will see what we can do about that. Financial technology, what we call FinTech, is transforming financial services in a way not seen before. We have unprecedented mobility. The smartphone is becoming our bank. People can consume financial services on the go. And we have unprecedented connectivity. The internet has compressed time and space. Interaction is real-time and unconstrained by physical boundaries. And we have unprecedented computing power. The devices in our hands or on our wrists are literally Pokemons, pocket-sized monsters that pack more data and more processing power than supercomputers did just a few decades ago. Digital payments are becoming more widespread, as you saw some of the examples, propelled by advances in near-field communications, identity authentication, digital IDs, and biometrics. Blockchains, or distributed ledgers, are being tested for a wide variety of financial operations to make them faster, more robust, more efficient. There are test cases to settle interbank payments, to verify and reconcile trade finance invoices, to execute, enforce, and verify the performance of contracts, to keep an audit trail, and deter money laundering. Maybe the biggest potential is in what is called big data. We're beginning to aggregate and analyze large data sets to gain richer insights into customer behavior and needs, detect fraud or anomalies in financial transactions, sharpen surveillance of market trends and emerging risks. Big data is in turn being driven by advances in sensor networks and natural language processing to gather information from a wide universe of sources. It's made easier still by cloud technologies to store and retrieve large volumes of information at low cost and on demand. Then you have learning machines and smart algorithms that can continuously adapt and improve on their decision-making with every iteration. Be it countries, businesses, or people, those who are alert to technology trends, understand their implications, and harness their potential will gain an advantage. To be sure, many of these technologies are disruptive to existing jobs and existing business models. But if we do not disrupt ourselves in a manner we choose, somebody else will, in a manner we will not like. Last year, the Monetary Authority of Singapore, MAS, laid out a vision together with the financial industry for a smart financial center in Singapore, where innovation is pervasive and technology is used widely. Since then, MAS has been working very closely with the financial industry, FinTech startups, the institutes of higher learning, and other stakeholders towards this shared vision. MAS's role in supporting this FinTech journey is twofold. First, to provide regulation that is conducive to innovation while fostering safety and security. Second, to facilitate the infrastructure for an innovation ecosystem and adoption of new technologies. Let me start with regulation. A couple of general principles underlying our approach to FinTech regulation. First, we believe regulation must not front-run innovation. Introducing regulation prematurely may stifle innovation and potentially derail the adoption of useful technology. But the regulator must run alongside innovation. It is important to keep pace with what is going on assess what the risks might be, and continually evaluate whether it is necessary to regulate or leave things to evolve further. Second, we apply a materiality and proportionality test to all innovation. This means regulation comes in only when the risk posed by a new technology becomes material or crosses a threshold. And the weight of regulation must be proportionate to the risk that is being posed. Third, we focus on the balance of risks posed by new technologies or solutions. Many technologies, for instance blockchains, mitigate existing risks, but they may create new ones. The regulatory approach must seek to incentivize the risk mitigation aspects of new technologies while restraining the new risks. Let me illustrate our approach to the regulation of fintech with a few concrete initiatives over the last 18 months. One, an activity-based regulation or regulatory approach to keep pace with payments innovations. Two, specific guidelines to promote secure cloud computing. Three, enabling digital financial advice and insurance. Four, a regulatory sandbox to test innovative ideas. And five, strengthening cybersecurity. Let me take each in turn very quickly. Activity-based regulation for payments. Some of the most visible fintech innovations are taking place in the payments space. They're making payments cheaper, faster, better, delighting consumers, and giving the banks a run for their money. But many of these e-wallet solutions are currently caught under two separate pieces of regulation in Singapore, because when these legislations were drafted, we did not have the internet in mind, let alone e-wallets. MAS will therefore streamline the payment services licensing under a single activity-based modular framework. This means holding just one license to conduct different kinds of payments activities. It means meeting only those regulations, because it's modular, meeting only those regulations pertinent to the specific payments activities these players undertake, rather than the full gamut of payments regulations. It also means adhering to common standards for consumer protection and cybersecurity, which they must all meet. Cloud computing. There used to be a view within some quarters that MAS does not like the cloud. Lest there be any lingering doubt, let me reiterate. MAS has no objections to financial institutions using the cloud. In fact, cloud computing provides economies of scale, enhances operational efficiencies, and delivers potential cost savings. In fact, a secure cloud infrastructure is an enabler for a variety of fintech innovations, including banking-as-a-service platforms. To put its money where its mouth is, MAS set out earlier this year specific guidelines on the use of cloud services by financial institutions. Financial institutions are free to adopt private clouds, public clouds, or a combination of these to create hybrid clouds. But we do recognize some of the distinguishing features of clouds, such as multi-tenancy, data commingling, and processing in multiple locations can potentially pose issues for data confidentiality and recoverability. And so we expect financial institutions to conduct the necessary due diligence and apply sound governance and risk management policies to address these potential vulnerabilities. Next, digital financial advice and insurance. The digital offering of financial advice and insurance is becoming more popular, catering to the needs of a growing segment of technology-savvy, self-directed consumers. MAS's regulatory framework for financial advice is technology neutral. But we need to update it to make it easier for consumers to benefit from the lower cost and greater choice that digital advice and insurance can potentially provide, while at the same time ensuring adequate safeguards for these consumers. Automated, algorithm-based digital advice on financial or investment services by robo-advisors has taken off in the United States in a big way and will soon reach our shores here in Singapore. MAS will soon set out proposals on the governance, the supervision, and management of algorithms for robo-advisors to ensure integrity and robustness in the delivery of these online financial advice. And we will consult the industry as always before finalizing the guidance. In insurance, MAS already allows insurers to offer online, without advice, simple term life and direct purchase policies with broadly standardized features. MAS will now allow insurers to allow the full suite of life insurance products online without advice. And MAS will be issuing guidance on the safeguards to be put in place for online distribution of insurance products. Regulatory sandbox to test innovative ideas. June this year, we launched a regulatory sandbox for financial institutions, as well as new fintech players outside the regulated sector to test their innovations. The sandbox serves two purposes. First, it allows experiments to take place, even where it is not possible at the outset to anticipate every risk or meet every regulatory requirement. Second, it provides an environment where if an experiment fails, it fails safely and cheaply, within controlled boundaries, without widespread adverse consequences. The sandbox itself is an experiment, so we don't know how well it will work. How we intend it to work? Well, MAS and the sandbox applicant who wants to come into the sandbox will jointly define the boundaries within which the experiment will take place. MAS will then determine the specific legal and regulatory requirements which it is prepared to relax for the duration of the experiment within these boundaries. We're pleased that we've already received several sandbox applications since June from financial institutions and from fintech startups. The proposals leverage a range of technologies including distributed ledgers, machine learning, and big data analytics. We're reviewing the applications, and we're really looking forward to having some of these proposals launched in the sandbox soon. And meanwhile, we'll be issuing today our finalized regulatory sandbox guidelines, incorporating feedback that we've gotten from the industry and road tested against the actual sandbox applications we have received. Like I said earlier, the sandbox itself is an experiment. We are learning, fully prepared that not all of it will succeed well, but it's something we need to try. A smart financial center must also be a safe financial center. As more financial services are delivered over the internet, there will be growing security and privacy concerns from cyber threats. Users will have confidence in new technologies and innovative services only to the extent they have confidence in cybersecurity. Strengthening cybersecurity is therefore an important part of Singapore's FinTech agenda. MAS works closely with other government agencies and with the industry to help ensure cyber defenses are robust. Given the interconnectedness of financial activities and systems, an effective cyber defense strategy requires close cooperation and sharing of cyber intelligence. A good model for such cooperation among banks in the United States is the Financial Services Information Sharing and Analysis Center, or FSI-ZAC. It is the global financial industry's go-to resource for cyber threat intelligence analysis and sharing. I'm pleased to say that FSI-ZAC will set up in Singapore the industry body's only cyber intelligence center in the Asia-Pacific region. And this center will help our financial industry better monitor cyber threats and provide better intelligence support. It will also deepen the capabilities of the cybersecurity community that is growing in Singapore. The second key thrust of Singapore's FinTech agenda is to facilitate the infrastructure necessary for an innovation ecosystem and the adoption of new technologies. We need an ecosystem where people can connect and collaborate and ideas can flow and multiply. We need common standards and interoperable systems so that innovations can be scaled up quickly and their potential benefits fully realized. Obviously, we want 100 flowers of innovation to bloom, but we also want to ensure they make a garden. So to facilitate such an ecosystem, MAS started with itself. So last year, we formed within the MAS a new FinTech and innovation group under a Chief FinTech Officer, probably the first regulator in the world to do so. The group's job is to work with the financial industry and FinTech players and help foster a conducive ecosystem for innovation. MAS has committed 225 million Singapore dollars, or 160 million US dollars, to support the development of a vibrant FinTech ecosystem. And earlier this year, MAS and the National Research Foundation, the NRF, together set up a FinTech office to provide a one-stop point of contact for all FinTech matters. So if you're a FinTech company interested in finding out what are the grants, assistance schemes available in Singapore, or connecting with relevant government agencies to expedite approvals, this is the office to go to. Creating the infrastructure for an innovation ecosystem is a shared responsibility and joint effort. MAS only plays the role of a facilitator. The real work is being done by the financial industry and the FinTech community, coming together to collaborate and create. Let me highlight some of the exciting infrastructure initiatives underway. First, physical spaces for collaboration and experimentation. Second, building the infrastructure for electronic payments. Third, a national Know Your Customer or KYC utility. For a blockchain infrastructure for cross-border interbank payments. And 5, an open API architecture. Let me start with physical spaces. A basic element of the FinTech infrastructure is having physical spaces that facilitate collaboration and partnerships among different players. So just last week, we saw the launch of Lattice 80, Singapore's first FinTech innovation village. Lattice 80 offers dedicated physical space in the heart of Singapore's financial district for FinTech startups to work, to connect, and co-create with the financial industry and VC investors. More than 20 global financial institutions, many of them represented in this crowd, have set up innovation centers here in Singapore. You would have seen during the Innovation Lab crawl earlier this week some of the exciting things they are experimenting with. Digital health solutions tapping on wearable devices, telematics for motor insurance, blockchains to streamline payments, and big data to produce customized service offerings. MAS itself has set up an innovation lab. We call it the Looking Glass, and it aims to spur collaboration among MAS, the financial institutions, startups, and technologists, and facilitate consultations for startups by industry experts on legal, regulatory, and business-related matters. Payments, an infrastructure for e-payments. We have a world-class infrastructure for electronic payments. It is a 24/7 real-time interbank fund transfer system. We call it FAST, short for Fast and Secure Transfers. But FAST is grossly underutilized. And Singapore is still heavily dependent on cash and checks as means of payments. The Association of Banks in Singapore, ABS, is working on 2 key initiatives to make electronic payments seamless and convenient for everyone. First, they're working on a central addressing scheme, or CAS, that will allow you to pay anyone using that person's mobile number, national ID number, or email address, or even any other social media address, without the need to know the recipient's bank or his bank account number. Second, ABS is working on a unified point of sale, or UPOS, terminal that will allow a merchant using a single device to accept all major credit card brands, including those that are contactless or embedded in smartphones. Third infrastructure initiative, knowing the identity of a customer or KYC, is one of the biggest pain points in the financial industry. The process is costly and laborious and hugely duplicative because everybody is doing the same thing. And the pain is pervasive because KYC and identity authentication are involved in so many financial services, from opening a bank account to making a payment to making an insurance claim. We need an infrastructure solution to this problem. Singapore is in the process of creating a national KYC utility. Now, obviously, this involves several layers of identity verification, depending on the purpose of the transaction, the extent of information involved, and the degree of rigor that is required for each particular transaction. We're starting with the basic building block. And this basic building block is the MyInfo service, jointly developed by the Ministry of Finance and GovTech, which is a lead agency for digital and data strategy in Singapore. MyInfo is a personal data platform containing government-verified personal details, example, the national ID number, residential address, and so on. MyInfo enables residents to provide their personal data just once to the government and retrieve their personal data for all subsequent online transactions with the government. MAS is partnering MOF, the Ministry of Finance, and GovTech to embark on a pilot that will expand the MyInfo service to the financial industry for more efficient, basic KYC using trusted, government-collected personal data. No more tedious form filling and providing hard copy documents for manual verification by the financial institution. No more data entry errors. Higher productivity for the financial institution, greater convenience for the consumers. The government will run a MyInfo pilot with 2 banks in the first quarter of next year before scaling it up to other financial institutions progressively. And beyond MyInfo, we have to think of more advanced forms of KYC for more sophisticated use cases. And this is something we need to think hard about together with industry. Blockchains. Another big pain point that financial institutions face is cross-border interbank payments. Today, banks have to go through correspondent banks to intermediate these payments. It takes time, it adds to cost. MAS, the Singapore Exchange, and 8 banks have embarked on a proof of concept project to use blockchain technology for interbank payments, including cross-border transactions in foreign currency. This effort is supported by the R3 Blockchain Research Lab and BCS Information Systems. And under the pilot system, banks will deposit cash as collateral with the MAS in exchange for MAS-issued digital currency. The banks can later redeem the digital currency for cash. This means that participating banks can pay each other directly with this digital currency instead of first sending payment instructions through the MAS. This is an improvement over the current large-value payment systems that are centrally operated. It strengthens resilience and lowers cost. The banks also have the option of using the existing common payments gateway that's provided by BCS Information Systems to transact on the blockchain. The banks need not rewrite their backend systems. This practical capability rides on the advances made by OCBC Bank in its recently announced interbank payments pilot. This project also marks the first step in MAS's exploration of ways to harness bank-issued digital currency. The next phase of the project will involve transactions in digital currency, possibly cross-border, with possibly the support of another central bank. Saving the best for the end, creating an API economy. APIs, or application programming interfaces, are likely to be one of the most important building blocks for innovation in the future economy. APIs are basically a set of protocols that define how one system or application interacts with another, usually from the perspective of information exchange. They allow systems to interact with one another without the need for human intervention. Publishing these APIs allows financial institutions to collaborate with external users to do many things, to seamlessly merge multiple data sets from different sources into an integrated, rich data set, and deliver more functional and customized solutions faster and cheaper. MAS aims to establish Singapore as a center of excellence for APIs on financial services. We're actively pushing financial institutions to develop and adopt APIs and to offer as many of them as possible to the broader community. APIs are the essential plumbing, the pipes that enable the connections and collaborations that foster innovation. The financial industry has come together in partnership with MAS and the Association of Banks in Singapore to develop guidance on APIs. So I'm pleased to announce that we will publish today what we call the Finance as a Service API Playbook. The API Playbook provides guidance on common and useful APIs that financial institutions could make available. For instance, many of us struggle today to track and use our rewards points that are on our credit cards issued by various banks, and often we don't use them before they expire. Imagine if the banks publish their rewards points suite of APIs. A single aggregator app could be developed that allows us to acquire and redeem points directly with the merchants and service providers. The playbook also provides guidance for the standardization of APIs. The industry has come up with standards for information security, data exchange, and governance mechanisms. Having common API standards will help promote greater data sharing and interoperability. The API Playbook is an important milestone in our FinTech journey. Some of our financial institutions are announcing their API initiatives over the course of this week. So watch this space. Well, not to be outdone, MAS, in a modest fashion, published last week 12 APIs for its own most heavily used data sets, and we will progressively expand the list. Let me conclude by saying a few words about the larger picture behind what we're trying to do in FinTech. We talk a lot about technology. It's not really about technology per se. It is about fostering a culture of innovation in an industry that is facing the headwinds of lower economic growth and heavier regulatory burdens. Innovation must be the way to refresh and re-energize the business model. And as I said, innovation is not always about high tech. It is about seeking newer and better ways to do things. It is about a spirit of enterprise. It is about hope in the future. And the financial industry needs that. And let us not forget the purpose of innovation. We want to create a smart financial center because we want to increase efficiency, to do things cheaper, better, and faster. Because we want to manage our risks better, to keep our financial system safe and sound. Because we want to create new opportunities to generate growth and good jobs. And most of all, because we want to improve people's lives, to provide them better services, to help them realize their goals. Innovative finance must be purposeful finance. With that, thank you very much, and I wish you all the best. Thank you.